Hi, everybody. It's the Saturday, March 8th. So it's the end of the first week of trading 2025. I make it a habit of sharing information that's apropos to the market when I have time. My name's Eddie, Master of Science and IT, data analyst by trade, and part-time stock and options analyst. I work part-time for LinkedIn, a subject matter expert in a collaborative article section. I run my own small consulting firm, and I do delivery driving as well. So always busy, have a BA and an MS. Let's get started. Why am I looking at the week today? And I haven't done it in a while. I've automated the process where my watch lists get imported into a staging workbook. So I've got a bunch of CSV files for the week. I've sorted them, filtered them, put them into Excel, and using Power Query, I'm able to visualize the data using a tool, a dot. It's called a com, it's called a com module in Excel that then feeds my Power BI visualization tool. Now I'm only looking at a sample of stocks. I'm looking, I think, at 100, but let's get started. All right, guys, let's get started. Like with any good research paper analysis, we do discuss methodology. The methodology really means what am I trying to accomplish and prove. So I'm going to prove some stocks did about average this week, what stocks did above average this week, what stocks did below. So the methodology says what is the average, and using statistics, really, I'll be able to say, look, standard deviation indicates 66% of the stocks fell within this trading range of percent move. Percent move is calculated simply take the closing price at the end of the week, map it to the closing price at the beginning of the week. So take the closing price, subtract the opening price. I got a delta. If it's positive, the stock went up. If it's negative, the stock went down. I could go into greater details about what else you can do with statistics, like what was the max price over the week and the low price, which is not what I'm doing at this stage. I'm simply looking at what stocks went up, what stocks went down. That's my methodology. Um, if in fact there are some stocks that fall outside that average, I want to take a closer look. I want to say who's this that went up way above average this week, and who's this who went way below average? Seems rational. That's why we're doing it. All right, so I'll give you a full detailed analysis of the watch list components. I mean, I'll go through them, from top to bottom. But at this point, I want to show you what amounts to statistical, information. So we're looking at the top 10. All right, the watch list top 10 is shown. This watch list contained about 225 stocks. So the top 10 is just a random choice. It's the top 10. If I wanted to say that the top 10 comprises about the top 5%, I'd say that's accurate. So the top 5% we'll look at first. If you've never heard of TGIFF, I don't blame you. If you've never heard of CBWTF, I don't blame you. But you should have heard of Goro generally. You should have probably heard of Novavax. What is notable for the week is the SQQQ, Pro Shares Ultra Pro Short the Qs. So people jumped on the idea that we're moving down in the Qs. I'll be curious to see how that performs next week because I think the Qs have started to turn things around. I may be wrong. I think they've started to show some bottoming, but let's not go into that. Let's just analyze them for what it is. They were so bad. They dropped 11% closing price to 30. So I'm looking at row 7, SQQQ, Pro Shares. I look at it because it's a stock that's, valued within what amounts to a good price of 30. Um, the others I mentioned, TGIF is a marijuana stock, I think, in Canada. The other one, CBWTF, also marijuana. And let's see, Green Growth Brands, I think, is also a marijuana stock. I guess it might have been eaten up by another company because my output there says there's an error. So ignore that. There you have it. the top 10 on the watch list moved between, 10 and 12% or so. The outliers were those cannabis stocks that are penny stocks. You'll see that the top one, TGIFF, is trading at a penny. The other one's trading at 4 pennies. The gold Goro Research Group is 50 cents, probably getting delisted. Stocks that are not on the so-called pink sheet or over the counter are above $1. So these must be pink sheets from the Toronto Stock Exchange, which I monitor, including watch list. I just like to know. Look, if I throw in $1,000 into a stock trading at a penny and it goes up to $2, you can do the math. Okay. Not saying hedge funds will do that. I'm not saying average people, but pot smokers do that. Okay. I've noticed. All right. So we've looked at the top 10. The only obvious point is that Novavax, which is the only legitimate company I think on the top 10 aside from the Qs. I don't call the SQQ ETF a legitimate because that's a gambling type of exchange. Day traders probably trade it all the time, but it probably doesn't change that much. It all the time. It probably only changes when there's huge volatility. So I don't consider that too legitimate. Now, eBay. Now, there's a good one. I forgot to mention that. eBay seems to have been really good this week. Trading at 63 at the end of the week, went up by 10%. We'll have to take a closer look at that at the end of the day because that's what stands out in the top. ChargePoint is the illegitimate penny stock. So, again, Novavax, eBay, those are the ones we want to talk about first this week, okay? All right, let's get this party started. And move on. Let's take a good look now at the bottom 10. The bottom 10 are stock number 217 or so to 228. The worst performing stock was Core One Labs. It's a stock trading at 6 cents. It's a penny stock. It dropped by 60%. I will not talk about that too much. Obviously, that's an outlier. So we'll go to Vistra. Vistra Energy is on my watch list, and I'm hungry for it. It dropped by 30%. Canopy Growth is a very famous marijuana stock. It's trading at $1.50. That's near the bottom. Dell Technologies seems to be destroyed. I kind of heard about that. Obviously, if you're into following the stocks, everybody mentioned that Dell was getting crushed. Couple penny stocks. VIR is a biotech that got dropped by 18. Airlines, Delta and United Airlines dropped 18 and 16%. You don't have to be a dummy to know that's a stock that's going to go back up eventually, and you may want to start getting ready for that. So we'll also add those to our analysis. And obviously, APA Corporation is something that is related, I think, to oil or oil storage, and NVDA we've all heard about. Okay. Um, what does that tell us? It tells us very simply that when you compare the top 10 with the bottom 10 on this watch list, the bottom 10 had a greater concentration of stocks that were in the outlier range or beyond the normal trading range. So I call normal trading range like anything, like the average. It's like how does the average compare? In other words, the average of the down performing stocks was like 20% when it comes to the top 10 that went down, whereas the average of the high performers was a little lower, obviously. I think we said it was closer to 10%. What does that mean? It means that generally speaking, they're talking about a trend that's stronger performing in the downside. You're going to make a bigger move to the downside if you were bearish versus bullish. Okay? Those terms are simple to understand and follow. So we've looked at the top 10, the bottom 10. Let's look at the mid-range. The mid-range includes Google. It includes Newmont Gold. It includes Apple, IBM, the NASDAQ 100. Generally speaking, that's a lot of IT firms. Those IT firms just look to be either a little bit above no change or a little bit below no change. Literally, that mid-range indicates, well, unfortunately, the stocks tend to go up more than average, like meaning more than flat. So if things are flat, they're either pausing in terms of whether we're in a bull market or they're reversing from a bull market to a bear market. That's just common knowledge. I look at these stocks as potentially changing direction. So we'll mark these stocks, we'll look at them next week, and we'll say, did they change direction? Because right now they're saying whatever direction they were going in prior to this last week, they've decided to slow it down. Now we know we've been generally in a bull market, so we know that generally this past week has been a pause. We're not gonna we're not gonna sell and we're not gonna buy. That's really interesting. To me, that shows strength. But that's just me, having looked at the markets as a rookie over the past couple of years on and off. I'll tell you, these are stocks that I'll put on my watch list. Um, that's it. QQQ is the ETF that tracks IT stocks, fairly flat. So we're looking at the eBay chart. The reason we're doing that is we've identified eBay as being in the top 10 performing of several hundred stocks. And let's be fair, um, its move is significant. Toward the left of the chart uh, is where it began to demonstrate some channel activity. And while you look at that chart, I'm just digging up the dates that we're talking about and how the chart was devised. It's important to recognize how the chart was devised. We're looking at the stock from September of last year, more or less September 1st, where on September 1st there is somewhat of a red candle, um, but it is more or less the beginning of this time period where the red candle is rejected and the price goes up from the 56 price range, more like 58 price range at the end of August to the 67. Okay, so it's about 9-10 bucks. 9-10 bucks is almost 15 to 20% move. So that's it. That was the strength of the move from a prior range of accumulation. The question is it sustainable? So I'll mark that price there. And you'll see the price on September 20th where there's that vertical bar. That vertical bar over here is coinciding with high volume activity. The next vertical bar that you'll see coincides with high volume, right in the same area, and then yet another range. So what I'm going to determine here is wherever I see red from wherever I see a big red candle, I'm concerned with whether it will return to that price or not. There seems to be a lot of interest at that price. So although eBay is poking its head up toward all-time highs, I think the majority of price activity is closer to the $65 range, but I'm not sure. So I will interest you with something that I consider a hedge trade, simply by taking a few minutes looking at it. However, it did take some time to build this chart. Those vertical bars are areas of high volume. Again, the high volume is on September 20th of 2024. Okay. Um, September 20th of 2004, the price is in the $63 range. And there's a red bar right after it, so it didn't hold right away. It was at all-time highs. It went up precipitously. I think the normal range is there between 65 and 60. However, it's attempting to create a new range. I'll call it the $70-$65 range. It's probably closer to the 70 $68 range simply because that was a previous high. My concern is that it's still not proven itself. It hasn't reached all-time high again. It's gone up really precipitously. So again, were high volume areas were generally areas of indecision. So this indecision to me on the last yellow bar indicates, of course, it's indecisive and it went down, but it's starting to poke its head back up. I'm more comfortable with a gradual increase to the higher low. So right now, I would suggest that this stock is overbought. Okay, my analysis leads to a position that is neutral. And I'll show you how I'm going to handle it next slide. A neutral position. So now what we're looking at is a position where we evaluated, decided that the stock eBay, which is trading at 70 bucks, is probably just as likely to go down from here as it is up. So I'm going to consider and compare my options to the upside and the downside. I may even go so far as to play a position above the strike price and below the strike price. Logical, right? Simple, logical. It's not something people generally practice all the time, but they should consider it as the first step when looking at a stock that's indecisive. It's logical as opposed to gambling, especially since you'll notice that there's a lot of price instability. I can get into the puts for eBay as cheaply as $7. The way you get into a trade that's $7 is by uh, creating a position where you're buying and selling puts in one transaction. So I'm buying the 66 put for about $12, and I'm selling the 67. So that's called a credit spread. On a credit spread, you're getting paid because you'll get assigned the stock if the stock trades um, below 66. Okay, I'm betting that it won't go below 67 or 66 bucks. That's why I'm buying that spread, but I'm also buying the vertical put of 68.67. The 68.67 spread is the difference between 35 cents and 20 cents. That's 15. So I'm paying 15 for the put between 68.67 and I'm selling the 67.66. Okay. I'll explain that in another video. That's $7. Conversely, eBay has the likelihood of going down of going up as it has, obviously approached all-time highs. It's the second or third time, and if you look at the chart, usually by the third time it starts to stabilize. The news has been okay, and you can think of it any number of ways to convince yourself that it's going up. But really, what makes life easier is you've already got a position in the downside. If this stock decides to go down or the opposite direction of a gain, you stand to win. You'll notice that this is a little more expensive than going down because people are expecting the stock to go up, meaning statistically speaking, it's been going up for a few sessions. The way math and pricing works, it's just linear. Like the price is what they expect it to be at. Should the price continue to go up? So it's more expensive right now to go up, meaning the demand is higher, supply is less, demand price is up. So the March 14th $72 call is 48 bucks. That's $2 out of the money. By comparison's sake, by comparison, we were looking at the put, and as I put it up, just get comfortable with the tickets, understanding this prices are shit and so on. put the put was something like, well, at the end of the day, the put was about the same price. No big deal. Um, but what I'm saying is people are expecting to pay a premium for these options right now. So it's 48 bucks to go up to 72. It's a little cheaper, 24 cents for it to go to 73, and even cheaper that it'll go as high as 74. So there's your ticket, $13 ticket in the positive direction. Take a peek at the stock of the week. It's eBay. It opened at 70 bucks, closed at 70 bucks on Friday, going from left to right. The stock started going down from 68 to 66 beginning of the week, Tuesday into Wednesday, stabilized Wednesday into Thursday at the 67 price. What I like to do is ask myself what is happening in the beginning, the first half of the period, and the second half. If you've watched my videos before, I'm big into stochastics. Stochastics are where is the price closing in relation to the highs and the lows. It's closing in relation to the highs. People are bullish. Sentiment is bullish. You'd be hard pressed to make a case that this stock is not in a bullish trend. To hedge my bet, which is to say, if I expand the context a little bit and I look at this price relative to a monthly price, I might feel more comfortable thinking that this stock isn't necessarily going to rocket to the top, but make it up gradually after fits and starts. So I would think that the stock is going to come back and test 69 before it goes back up to the all-time highs of 71. My conclusion is this is an indication where there is uncertainty generally in the price. Although it went up a lot over the week, it's going to enter a point of uncertainty. And that's where I can capitalize on the stock, making inches, not yards of gain. So I will set up a twofold position, one to the top and one to the bottom. One costs 13, one costs 7. For 20 bucks, I'm getting into a trade where I win if it goes up or down. How do you like that? Those are apples, okay?